All right, welcoming everyone to this session, which is an introductory session on derivative trading strategies. This is going to be a sort of general discussion session on the strategies module of the derivatives, futures and options course by Bangalore Investors Club. This is Dr. Musa on the side of the webinar, and we're just going to spend the next, I don't know, maybe an hour or so looking at what to expect, what from the module. Just for everybody's information and clarity, this is the third module of the comprehensive derivative course that we have in BIC. The first two modules are only on futures and options, right? So you look at, if you go to the website, you will see that we have a futures module which we have completed. Then the second module of the course is options module, which we have also completed. And now we are going to be looking at the trading strategies, derivative trading strategies module of this 3-module program. So prior understanding and some experience, hopefully, of futures, options, their analysis, their data, tracking them, and a comfortable understanding of all the key concepts of futures and options is already assumed for participating in the derivative strategies module. So just to be absolutely clear, we are not going to be explaining futures, options, and theoretical or data analytical concepts and aspects of futures and options. That would be a requirement to understand this module. And we're going to be looking only at specific trading strategies and approaches that are very practical and very, very hands-on. Right. So with that clarification, let's jump into the introduction and see what lies ahead of us in the next several weeks. Right. So essentially, what we're going to be doing as part of the derivative strategies module is looking at fundamentally two very, very important things. And this is best that we understand this. First, you have to have a view on the market, right? So this is, just something that goes without saying now. You have heard me say this enough number of times. So there must be a prior or pre-existing view on the markets. And what do we mean by view? You have to have clarity, or let's put it this way, a high degree of confidence about what the market or the stock or whatever the underlying is likely to do in terms of price and time, right? So by now one should be clear what we mean by a view on the market. We're looking at where do you expect the price to be in the next whatever time frame. So that obviously directly impacts what contracts you will trade, what strike prices you will look at, etc. Right? So what is the view on the market? It could be bullish, it could be bearish, it could be sideways, or also called range bound. And again, when you say bullish or bearish, till what price level, by when, right? So these are two things that you have to have a pretty good clarity on. And it's absolutely fine, like I've said many times, that if you don't know, It's also fine to say that I don't have a clarity on what the market is likely to do. And when that is the case, it is best to stay away from the market and not trade. So you must have some high degree of confidence in your view. And once you have that, so again, the view could be something that you arrive at from fundamental analysis, right? It could be technical analysis, right? It could be event based. You have a view on some event that is happening or going to happen. It could be like, for example, known events like financial results, annual results of a company. Maybe there's an election going on, and the result of that will affect the market, etc. Or it could be you have your quantitative guys, right? You could be a quantitative / statistical person, whatever it is, right? But whatever it is, you have to have a view, and this is extremely important. Second, once you have a view, you're going to execute, right? So implementing the view using, right? So this is something that is, so you have a view, and that is something that we're not really going to discuss in the derivative strategies course. However, as you all know, we want to make it as practical as possible. So we are going to keep looking at the market from various perspectives, and then look at what strategies are relevant, right? So implementing the view using stocks or whatever underlying futures or options and any combinations of these three basic what shall we say, instruments, right? So once you have a view, then you're going to look at what other ways you can execute or implement that view. How are you going to implement that view and execute it, manage it, right? Are you going to use stocks? Obviously, you already know that. Or are you going to use futures or options or a combination of one or rather two or all three of these instruments? And what are the permutations and combinations that you're going to be what are the ways in which you can combine all this to achieve what your specific view is? So I think I should add that specific view on the market, implementing that view, and this is basically the crux of the course: implementing the view with whatever instruments that we have and what are the combinations. And just to quickly give a overview of what to expect. So first of all, one has understood futures and options. So your basic building blocks are these, right? These are your building blocks. We're not going to go into that anymore. And then based on these building blocks, you're going to be having various option or rather strategies, let's put it that way. Now, just to be clear, what are the strategies that could be there, and what should you know about these strategies, right? So these are the things that we're going to look at in the course. Okay. Um, all right. So I think there was an audio issue. I will start again. So what I was saying is we're going to be looking at strategies, and in those strategies, we are going to start by looking at naked options, right? And what we look at uh, when we say naked options is basically things that we have already sort of discussed when we did futures and options, and we discussed things like mark to market. We discussed things like profit loss payoffs, margin money issues, and just going long or short on their own. And this is sort of something we will look into a lot more detail, and we're going to be doing that with practical examples that we will be looking at from the website, sorry, from the market. So one of the things that we will be doing during the strategies course, much more than we have before, is we're going to be looking at charts. We're going to be looking at things in the actual market, and we're going to be reviewing stuff. We're going to be looking at all sorts of things that are happening on a very regular basis, and actually quite interesting with all the drama that has been happening in the markets, which you are all, I'm sure, aware of. And we will look at what could you do, what are the different types of approaches that one could have for what's happening in the market. So we are going to be making it very practical. I can assure you of that. And uh, for so one thing that we need to clarify is that, first of all, like we already said, you have to have a view, right? Now, once you have a view, then we can discuss how to implement that view. Now, this is sort of chicken and egg problem, because uh, the view is really whatever the market is likely to do. So you can't say I want a bullish view or I want a bearish view. There is something that the market is doing, and you just have to follow that. So the practical side of the strategies program, the module, will really depend on whatever the market is doing at that time, right? Now, there will be some, hopefully, of course, most of the stocks follow the main index, and therefore, if the main index is, say, bullish, you're going to find lots of bullish choices. If the main index is bearish, you'll find a lot of bearish choices, etc. Right? So we will be sort of looking at what the market is doing, and we can't really force a certain view. However, the market is hopefully wide enough, and we will be able to find all sorts of different strategies practically. So let's look at what we're going to really focus on. So on the website of the strategies page or BangaloreinvestorsClub.com, you have a basic idea, or it's not a comprehensive list, but a pretty good list of what you can expect in the course going forward. So first of all, we'll start with spreads, right? So what is a spread, and what are the different types of spread, which is already mentioned here. When do you use spread? How do you use spreads? How do you build spreads, right? So we're going to be looking at that, and this is perhaps the really most basic combinations of options, or futures and options, or stock and futures, or stock and options, or futures and options, whatever the various combinations, which give you what is called a spread. And then we will look at either perhaps we look at all the bullish strategies first, or we look at the bearish strategies, depending on what the current market situation is. As you all know, as on 15th of February 2018, when we are doing this course, the last week back, or this week, has been a pretty bearish week for the global and local markets, but this week has been a sort of bullish or pullback type week. And as we go through the course in the future, you will see that various aspects of the markets will do their own thing, and we're going to try and figure out what the best strategy for that is. So just to look at bullish strategies, now this is where, just to give you a sense of what we're going to be doing, your view becomes so important now. Bullish strategies for most people would be just buy something, buy a stock, I'm long, or buy a futures, I'm long, and it'll go up. That's the general idea. But now this is where it becomes really interesting and fascinating, and really is going to require you to apply your mind a lot, which is how bullish are you, right? How bullish are you? So coming back to this, the specific view, how far do you expect that stock or the underlying to go to, and by when, right? And depending on that, you're going to use one of these bullish strategies, right? Um, um, like I said, this is not really a comprehensive list, but we've mentioned 10 strategies here. You will see later in the course why we've numbered it like this. 6 plus 4, because there are a lot of these subtleties in the strategies, and it's going to be really interesting. Same thing for bearish strategies. So you say a stock is bearish, it's going to go down. How far is it going to go down, and by when do you expect it to go down? I think the last 1.5 to 2 weeks have given us a very interesting view into how the markets behave, completely emotionally, falling by hundreds of points and several percentage points in a day, recovering and or staying very bearish for a few days, a week, and then the next week everything seems to be all fine and honky dory. And if any of you who have already done the futures and options module have been tracking any of the charts of the futures and options charts, puts and calls, well, you know how dramatically those prices have changed, and could have made you very rich or could have made you very poor. So again, when you talk about bearish strategies, how far down and by when, and what is the appropriate strategy for that. Now, all of us very intuitively know that, okay, if you're bearish, go short. If you are bullish, go long. Where it becomes a lot more interesting is what happens when the market goes sideways, right? If the market is going sideways, then what should I do? And well, there is no answer as far as long short is concerned, right? I mean, in the traditional way. And by the way, the term long short, etc., will undergo a pretty radical transformation in the strategies course. And just to give you a heads up, if you're long on a put, you're bearish, correct? And if you are short on a put, you could be neutral to bullish, correct? So many times what at the retail level, people by default, something is going up, you're long, something is going down, you're short. That is really not, what do I say, applicable accurately in the strategies program. So you will see that your understanding will undergo a transformation there. And neutral strategies, well, how do you make money when the market is range bound or pretty flat? Right? So this is going to be definitely one interesting place where we're going to be looking for the first time in how one could make money in a flat or a neutral market. And well, you've heard me say this before, there are only three things that the market can do as far as price is concerned, or rather there are only three things price can do as far as the market is concerned, which is go up, go down, or stay sideways. And that neutral strategy is going to be definitely an interesting place to be in. That will cover all the three price actions that can happen. And of course, in real life, things go up one day, down the other day, flat the third day, or 1 week to another week is different. So all this becomes a lot more interesting. And again, I'm reiterating that we will see, or rather we will do our best to identify live setups for each and every of these strategies that we are talking about, and we are going to track them, we're going to follow them. So be prepared for a lot of very on the market activity. So I really hope that you free up some time and energy and have a fresh mind to track the markets for probably anything for the next at least 4 to 6 weeks, maybe even 8 weeks, depending on how the uh, course goes, depending on your pace of absorption, questions, queries, etc. All right. So generally, when anybody does options strategies course, this is all there is. There is the part about spreads, there is the part about bullish strategies, and there's the part about bearish strategies and neutral strategies, and that's it. But we are going to actually go much further, and we're going to look at this section. And this is something that's going to make it really, really interesting, in the sense of how many times have you been in a sticky situation in the market. And when I say sticky situation in the market, you already have a trade and it really did not go the way you wanted it to, or you were hoping it would go. And then you are sort of second guessing yourself, you're not sure what you should be doing, and you are reviewing your view, right? Your view has changed perhaps about the market, but you already have a position on in the market. So we're going to be looking at, for example, what are called defensive strategies, right? And here, please note this terminology very, 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 very carefully. We're talking about protecting a loss of profits, right? Right? Protecting a loss of profits while staying in the market for any further likely profits. I'm sure those of you who have traded can relate to this very, very, you know, seriously. How many times have you had profits on your account? It's there for the taking. If you got out of your trade, all that profit is yours, but you're hanging on because, well, greed took over, because you, well, dil mange more, and you said, okay, let's see for another hour, another day, another week, and before you know it, the market turns against you, and then, well, you know how many times you face that, right? Now, is there something that you can do? Is there something that a trader can do to say, okay, I have this much profit, let me protect that, but if I get more, I'll stay, I will, I'll be glad to have it, but I'm going to make sure what I have is protected. Now, some of you are thinking about stop loss orders. Yes, that's definitely one way of going about it, but you also know the pain points of stop loss orders, as in, it hits and then the market goes in your favor and you're like, you're not in the market anymore and you're wondering what the hell to do. Can we solve that dilemma? Can we solve that emotional problem? And the answer is yes. We're going to be looking at this, right? I'm sure that has gotten some of you really excited and curious as to what this might be. Well, we'll just have to hang on and stay around till that session. Then repair strategies, right? Maybe you made a mistake, right? You made a mistake. It could have been an execution mistake. It could have been a mistake in the view. Maybe you had a one view of the market. You went, you executed something, and now you're having a loss, right? You're having a loss, and well, while it's very easy to say, hold on to your profits, let your profits run and cut your losses, which of course is the thing to do. We all know how emotionally difficult that is. Now, would it not be nice if there was some way to recover from losses, right? Because emotionally we get really, burned by losses, and here, when we say loss, you're talking about a loss of capital. It's gone down. And is there something to recover from those losses that you are staring at on your screen? And are there specific option strategies or derivative strategies that one can implement specifically with the goal of recovering from a loss, which is a very different thing from saying you want to profit. You want to recover from a loss. You want to dig yourself out of the hole that one is in, right? All right. Uh, Third, protective strategies, right? You entered the market, but now you have cold feet, right? You were very sure about your view. You took a position in the market, and now you have second thoughts. Maybe you are sitting on a slight profit. Maybe you are sitting on a slight loss. Maybe it's just more or less neutral, and you can get out, of course, in all these scenarios. But you have, like, it's a hesitation. It's a second thought. It's like, should I not? Well, obviously the best thing to do to not have any of this psychological trauma it's almost that, isn't it, is to just get out of the trade. But once you have a trade on, all this iffiness that keeps building, hopefully if there's something which is like, okay, you are in, but now the question is this: you're not sure whether to hold onto your position, whatever it is, for a bullish view or a bearish view or a neutral view, whatever it is, or should you exit, right? You're not sure. And is there something that you can do, or are there strategies that can help solve this dilemma, right? Again, I'm sure this is a situation that we have all faced, and we will be trying to resolve. So in the derivative strategies course, like I said, apart from doing just what is very, very commonly done in terms of spreads, bullish strategies, bearish strategies, and neutral strategies, I think the really interesting part is here, right? A lot of it is really being smart and being intelligent, being uh, I was going to say creative, but that's really not the word. It's really being systematic in one's approach of using the basic toolboxes, toolkits that you already have or are aware of, which is puts, calls, futures, and stock, right? So these four are your building blocks. What combinations can you put this to achieve the goals that you want? And the goals we've already mentioned. And like I said, we're going to be doing this really live, hands-on, and we're going to look at practical setups. So a few things before looking at being ready for the practical setups. So I all hope that you really have charting software, right, with up-to-date data. You may, depending on what sort of participation you want in the markets, live data, right, for whatever instruments you are going to trade in. Okay, and for those of you who plan to be really active and serious, I would strongly recommend that at least for the duration of the strategies program, if you can have live data. Not that I want you to be sitting in front of the screen all the time, but I would really love for you to be able to track it, right? And so maybe you could just put alerts, maybe you could just put whatever works for you, so that you can see how things change on a live basis. You can be sure that there'll be a lot more activity on the WhatsApp group for this module. So live data would be good, charting software would be good, right? Events plus earnings calendar, right, for the next 2 months would be good, right? So why? Because then you know what is coming up. A lot of events and earnings, etc., are known very much upfront. It is only the unknowns, unknowables that shock everybody. But Well, that's the case for everyone. So I hope all of you have identified some events or earnings calendar. There are plenty around on the web. Your broker terminals usually have something already built in nowadays, so have a look at that. And then, right, be very familiar with order types on your system. Right? By the way, live data, I just wanted to mention, you probably already have it through your broker terminal, trading terminal. You may not have explored it enough. That's the only thing. So please have a look at that. So as part of just to maybe sidetrack a bit, I think we will be spending some time. Not I think we definitely will be spending some time on setting up your what trading account for F&O trading. Right now, what I mean by that is setting up your options table, for example, your futures table, for example, and having it in a way that is logical, that makes sense, and different. There are different ways of arranging that practically on your screen. Whatever suits you, you have to be absolutely clear on. So we will spend some time doing that. Of course, can't do that for all trading accounts and trading terminals, but we'll do that for at least maybe 2 3 of the popular ones. And please investigate whatever you have at your end and get familiar with what is there, because it'll really be a shame if all that's there but you're not aware of it, and you jump into the trading part, but not know how to actually go about it, right? So that setting up your trading account interface, rather trading interface, I think that's so charting, live data, watch lists, etc. Right? Then, of course, please have funds right in your trading account. Again, no real number, but at least I think a lakh or two plus is the absolute minimum. Of course, a lakh or two is really not enough for margin requirements now in futures, but a lakh or two is enough if you're going to be doing only options. And again, when I say doing only options, talking about buying options, being a holder of the option, a lakh or two is not going to really be enough to write options. It is, but you're going to get squeezed in terms of you might be able to write only one or two lots and not really much more. So I hope you have actually a lot more capital than just one or two, 5 or above, 5 lakhs or above, or that's ₹500,000 and above would definitely be much, 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 much better. Yeah, I think that's it. I don't know if I've missed anything. If you have any questions, if you have any queries, ideas, suggestions, then please feel free to ask. Oh yeah, I think one thing to be very clear about is the approach for the classroom, for the session, for the whole module will be the flipped classroom approach, right? So all of you already know that we have a YouTube channel, right? So on the YouTube channel, there are a lot of things that have been uploaded, where we have the options course, and we have options um, um, strategies, etc., courses which are there, and I'm going to be sending you links for those sessions. And the deal basically is that you're going to be looking at the videos, and there are separate videos already now for each and every one of these. Where did that go? For each and every one of these strategies. Okay, not in the sense of there's a video for synthetic long call and synthetic long stock and OTM put time spread. It's not like that. There are videos for the spreads, there are videos for the bullish strategies, bearish strategies, etc. And we may discuss one or more of these strategies in a particular video. So we're going to be doing the flipped classroom where you will watch a video on the topic, and then we will have a live interactive session as we have been for the options module especially. And we are going to be doing two things in that live interactive session. So flip classroom, so part one, watch the video or videos of a topic or strategy. And then part two, as you already know, will be a live webinar to discuss the strategy and to identify live setups appropriate. Right. So this is where again I'm coming back to the requirements. To identify live setups, you have to be familiar with what the market is doing. Right. So it would really be good that you are actively tracking the markets and evolving your view on the markets, right? So I would really urge that you look at the charts every day, and of course, it could be charts, it could be fundamentals, it could be news, it could be events, whatever, but do this please every day. And have a sense of how the market is shifting and how the instruments, the strategies are behaving. And you can do a paper trade if you want. If you don't want to really put on real money, that's fine. But if you're not going to track it, if you're not going to be able to really figure it out, then that is definitely going to be an issue, right? So actively tracking the markets and any what would I say? Dedicated software for futures and options tracking and trading, right? So generally something like you have option strategy softwares nowadays available on more and more of the trading platforms. So again, please have a look at what you have, and then we will look at what the participants have and focus on those. No point looking at something high end or looking at something sophisticated which you will not use, right? So please have a look at what you already have. I think on the WhatsApp group we can share what are the software platforms, trading platforms you have, or any softwares that you have which are designed for futures and options, and we can focus on that. I would like it to be really as practical as possible. So this is what you can look forward to. So coming back to the approach, I will be releasing the videos on in step by step, not everything at one time. Finish a strategy, find live setups, discuss it, track it, and then move on to looking at something else. At the end of the derivatives strategies course, right? So you will look at, let's put it this way, uses, right? So this is something which is important in the sense that the general impression that most people have about derivatives is that they're speculative, that they are high risk, etc. So we're going to be looking at derivative strategies from one more angle, from an investor's right? Not just to be clear, not versus a trader. Okay, investor, used to an investor or an investor. So when I say investor, I'm talking about somebody who's investing for the long term, at least over many, at least over many months. Let's put it that way, since this many years thing doesn't seem to make a lot of sense in a very dynamic world nowadays. For a trader, right? So now again, trader, you could divide it into somebody who is day trader. You could look at somebody who is a positional trader or a swing trader, etc. So we'll look at all these things. We look at it from uses for hedging, for leverage, right? So hedging is you want to reduce risk, leverage is you want to increase risk, right? Obviously in the anticipation or hope of higher return. So I think this is something which is really important, because who are you, right? This is something that you're going to have to. Who are you, right? Who am I? Are you a speculative trader, right? Who likes to take high risk? And of course, we all really like the idea of making lots of money in a short period of time. But really, who are you, right? Are you really an investor? Are you a trader? Again, uh, you could subdivide each one of these into more categories. Are you a person who's hedging for leverage, um, for right? So we'll also look at, say, creating a portfolio of positions which are mostly F&O, right? So generally, when you talk about portfolio, you talk about portfolio of stocks underlying, right? Why not a portfolio of futures and options, which are you're holding in the uh, 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 trading account? I was going to say demat account, but that's wrong. In your trading account on a for many days or weeks, and how would that be? We'll look at that. Of course, this sort of stuff requires a lot more money, funding, and a lot more tracking and a lot more sophistication. So we'll see. It depends. I want to make it relevant to the participants and not just go off into academic. So we'll definitely touch upon this. May not spend too much time, but sure, if there are people who have that sort of a need, we will do that also. Greek-based strategies. So that has not been mentioned specifically. So, folks were asking in the options module about things like delta neutral and theta, uh, eating time, uh, things like that. So we could definitely look at that. In which case, I hope on your trading platform you have a Greek tool to give you live Greeks on what the options that you're looking at are, so that you can relate to that. So we'll look at some Greek-based trading or strategies. Again, very mathematical. So just to clarify, it's expected that you already have a very clear understanding of all the Greeks, not all, but the important Greeks from options. So that delta, theta, and vega. Right? Those three Greeks you have to know really well. We'll be revising the concepts very quickly, but all that has been covered in the options module. So we look at Greek-based strategies. Be prepared, I think, also for when it comes to approach, uh, being very flexible uh, due to any sudden market movements, right? So this is something which is very, I think, important and pertinent, has to be mentioned. There could be some event that just happens to happen in the market, and it's an opportunity for us to suddenly shift focus and look at a different strategy, which perhaps we might have done much later down the road. So I'm just thinking there's so many things which are in the world so unpredictable right now, right from things like the Trump presidency to North Korea, South Korea crisis, to what's maybe happening with Brexit. In India, this year, 2018, there are going to be a whole set of state elections leading up to the general elections end of 2018 or early 2019. I think so. There'll be a lot of noise and uh, stuff that will happen. And suddenly one of these events might overtake the schedule. So we'll be discussing maybe bearish strategies and something very bullish happens and markets gone into a completely different behavior. Well, we'll shift with that, right? Maybe there's a sudden news of some strategy of some when I say, sorry, I should not use the word strategy, of some event that's going to happen and we're going to have to wait for what that might be. It could be, for example, something right now like the 2 or 3 important cases that are happening in the Supreme Court. One is Aadhaar and its validity, legality, etc. And the other one is the Babri Masjid issue. Who knows what we don't know? And that suddenly, because of that, the market decides to do something. So be flexible on this, and as you will see, that will be really required for anyone taking up derivative strategies seriously, right? So this is it. I think as far as the duration is concerned, like I said, it's anything between 4 to 6 weeks on the lower side to I think maybe even a month, sorry, even 2 months. So somewhere looks like mid-March at the minimum. We're starting in mid-Feb, probably end of March, who knows, mid-April is when we can expect to finish this module. Let's see if there's anything that is there. No, I think that's it. All right. So if you have any questions, if you have any, doubts, please feel free to get in touch, and we'll take it from there. And before closing the session for now, thank you very much for being in the session today. I hope it gave you clarity of what to expect. If anyone has any questions, please use the mic or put it in the chat box, and we'll take it from there. So once this session gets over, I will send out to the participants who registered the first set of videos for you to start watching on as part of the strategies module, and the first set of videos will be on spreads. All right. So before we close, any questions, any doubts, any queries, any clarifications, please do let me know. Just wait and take a breath while we wait for any questions to pour in. Let's see. All right, so looks all good. So thank you very much. You know how to get in touch if you have any questions, and I look forward to the next, well, 1.5 to 2 months, and I look forward to it being very insightful, very hands-on, very practical derivatives experience, which will hopefully really expand your understanding, your mind, and give you a much deeper and a wider sense of what is really possible if one takes the markets more professionally, right? So with that, thank you. Have a great day, good evening, good night, or good morning, wherever you are, and I'll see you in the next live webinar.